Hi, everyone. This is Dell, Chief Production Officer at Kind Lending. We are here to kick off our seventh season of Dell Talk with a very, very special guest. Not a better way to kick off the seventh season. And here at Kind, every year we come up with a theme going into the new year. And in 2026, our theme is leveling up. And not a better way than to level up with Barry Habib. Now, Barry, most of you know who he is. But as a reminder, Barry is the CEO of MBS Highway. He's a best-selling author of his book, Money in the Streets, which I've read actually twice. Barry, thank you very much. He's a director of the Fannie Mae Board. And most notably, he has won the Crystal Ball Award from Fannie Mae 4 times in the last 7 years, most recently in 2024, for giving the most accurate real estate forecast out of 150 economists. So Barry, I am so happy that you're here with us today, my friend. Good to see you.
Tal, it's great to see you, brother. You look well, and speak leveling up. I mean, you guys always level up. Kind does, you do. So it's a privilege to be here with you. I'm looking forward to chatting.
Yeah, thank you, Barry. Thank you. It always is, man. Over the years we developed a relationship. You just not only are you such a great professional for the industry, Barry, that a lot of people lean on for not only advice, professional and personally, but just in general for knowledge of what's happening out there, and I want to kick off this chat to talk a little bit of what has happened in 2025 before we get into what we're doing in 2026, if you don't mind. A lot of movement in the industry, and congratulations to you again for working with Fannie Mae so closely now. Tell us just your thoughts of what's happened and what's going to happen over the next 45 days left here in 2025.
This time of year, many times is a period of time where people kind of slow down a little bit because the holidays, it's an easy excuse. Oh yeah, we'll do it after the holidays. But I think that it can be an advantageous time because your competition might be slowing down. So I would double clicking here. I'd definitely ramp up because you might find some more opportunities, a lot more social gatherings that occur at this time of year. And just don't go to the social gatherings and just be there with people that you are familiar with. Make the new contacts. I think those are just some simple things that you could do to ramp up your business and get started into the new year. And then as we talk about things that you need to be doing right now in this environment for 2026 to be successful, I've got quite a few thoughts on that.
Yeah. Barry, you mentioned that. Interesting you say that about attending events. Like lately, I've been attending a lot of events with people. Recently we're at NAM, different events throughout the year. Do you find that people sometimes go to these events and lean towards the people they know only and don't expand?
Almost always, Del. Jim Rohn, okay, just really world famous, rest his soul, speaker, educator. He was a mentor of Tony Robbins, and he did spend quite a bit of time with me as well and helping me. And I remember at dinner one evening while we were together, he just said, Barry, make sure you attend the gatherings, meaning go to the events. And then while you're there, you need to be broadening your horizons. You need to be making contacts, asking people what it is that they do, finding ways that you can either help them or that you can work together in expanding your networks or maybe building a business relationship together. These are really critical things that we have to take advantage of. And so often you will see people attend events and not socialize out of the circle that they know, be pretty introverted. It just happens. Look, it's not easy to get out of your comfort zone. Okay, it's harder, but if you're at the event anyway, think of it as an opportunity, and you're there to work. So push yourself to do so. Don't drink. You're there to work. You're there to gain relationships. Just go there and make sure that you have a focus to do so, and really emphasize that, because I think that you will find that you will be rewarded. It has changed my life in so many different ways. The people that I met, the contacts that I still have, the friendships that I still have. Look, starting Mortgage Market Guide all those years ago, it really started at an event. I brought this up in my book. If you read my book, you know this obviously already, right? So I started Mortgage Market Guide because attended events, spoke to people I had never met before, built some relationships, and before I knew it, one became somebody I worked with. Another was someone who was really helping me to gain insights. And another was someone who helped me gain 50 speaking engagements, just all because of attending just an event that I didn't even want to go to it because I wasn't feeling that great. I kind of went like, it was a pain in the ass to get to because at the time I was in New Jersey going to Santa Fe, New Mexico. You had to take like 3 flights to get there. It was just, but while I was there, really, and this happens over and over and over again. So this just happened to be just an example of how life-changing they could be.
Yeah, Barry, that's very well said. Interesting you said about the drinking piece. I've seen, a lot of people attend these events and it's almost like a happy hour the whole time instead of we're there to work. I remind everybody in my team, hey guys, we're working at these events, right? But interesting you said that about recently, just a quick story on that, Barry. Like recently I went on a hunting trip and with a bunch of people I didn't know, right? And I ended up meeting somebody that owns a great data company, and ended up meeting him for lunch and a lot of great information we give our brokers and loan officers. So just like that, I wasn't sure if I was going to go or not. Barry, we're always busy, right? The excuse is, I'm busy or whatever. But and this was in South Dakota, and we made time to go, and it turned out to be we met a lot of great people.
Yeah, and the other thing too, Del, is like I see this at conferences all the time. People don't show up for morning sessions because they're out partying all night. I mean, you party at home, do whatever you want to do. But if you're going to the event, get the most out of it at the event, and show up. Don't.
Yeah.
Listen, just treat it seriously and get serious results.
Yeah. No, I hear you on that, Barry. This is so refreshing that we're having this conversation. We didn't even talk about this, but it is such a big piece of what I hope the industry goes toward because there's so many great people out there.
That's a step. That's part of leveling up. Is level up your maturity, okay, if you're not doing it already. And then you have to level up your education, Del. I mean, that is look, you've got, not only have you got competitors out there, but you've got AI now. And AI is widespread in the hands of a consumer. So many people are using it. So look, knowing how to put a deal together or guidelines, you can't beat this thing, okay? You cannot beat it. It is going to beat you every time. Yeah. But remember, where can I beat AI? Where can I be better? I can be better because AI relies on data that is past history to give you information. But you can make the distinction because you can give forward guidance that AI can't. You can do things that AI can't. And that's what you have to do. I mean, stop thinking of yourself as a mortgage professional and start understanding that what your job is to do is to be a wealth creator. You have to manage debt and create wealth. That's what it is. And in order to create wealth, you have to understand the markets and see where the opportunity is. Understand what is driving interest rates, where they're heading, where the opportunity is, and how that will affect real estate values so that you can show people the opportunity that they're either gaining or they're missing by listening to the foolish media or listening to their friends who are freaking clueless. I mean, Del, you think about it, 2/3 of all net worth in this country, 2/3 is in home equity. 2/3 of all the net worth. You know the net worth of a homeowner is 44 times that of a renter? 44, that's not a mistake. 44 times that of a renter. Yet the media will tell, rent or this and that. They'll talk about affordability and they'll talk about the fact that the real estate market's going to crash. They've been saying that for how long, okay? Right. The last 83 years, Del, there's been 5 down years, 78 up years. What asset has performed that well? None. Zero. You can look it up. Nothing has given you more consistency than real estate. The only reason that happened was because we had stupid underwriting guidelines. I mean, no income, no asset, no job, no down payment, investment property, 580 FICO. You're approved. Like, fog up a mirror, got a loan. We don't do that anymore. So, Del, given that we've eliminated that, sure, you might have some small down years in real estate, but you're not going to have catastrophic situations. Now, look, remember, real estate's very local, very, very local. So I'm talking about on a national level. All the different areas can behave obviously better, can underperform. So we're talking across the U.S. if you used U.S. numbers.
Yeah, it's a lot of opportunity, Barry, and there's so much. You mentioned AI, and there's so much AI. Like there's so many conferences about AI. There's webinars we can take, and we're trying. Obviously, it's kind of like the new race. I think trying to close loans as fast as possible and bring tools to market as fast as possible. And I feel like it's changing every week. Barry, like the AI that's out there, I'm almost even daily. I look at demos all day long and you get approached by companies all day long. Well, what do you think the loan officers need to do when it comes to leveling up with that? Because I still talk to some. Yeah, Del, I don't know. Chat GPT, and that's it. And I'm like, guys, come on. They're afraid. They're afraid.
Well, so the first thing is I wouldn't get overwhelmed. Okay, I would not get overwhelmed, but I would use it as a tool. I'd first use it personally and just integrate it into things you do. Stop using Google, use Perplexity. So you don't need Google, use Perplexity. If you're not doing that, do that. And get a Gemini or a Chat GPT and just use it. Start asking it questions and then follow-up questions. Then you're gonna get a lot of wrong answers, so you can expose the weaknesses. You definitely have to guide it. I correct it more than it gives me answers. But the research and the answers it gives me become extraordinarily valuable. I had to become super proficient because of my medical situation, and it has helped me. It's helped me like ask questions. And just recently, just tax situations that I'm able to get a lot of information. Now, not all of it's going to be accurate, but now if I have a conversation with someone who has a greater level of expertise, I can ask better questions. I can do follow-up. I can get detail. So if you just integrate it into your life, you will then have a much deeper familiarity with the benefits and the weaknesses. And therefore, you're able to be a better resource for your client. Now, when it comes to, again, understanding what it looks like in the future, it really starts with how deep of a market understanding do you have? Do you know what the Fed funds rate is, for example, the most important interest rate in the world? If you don't know it, you have a big hole in your business, okay? Somebody who's going to be better than you is going to crush you. So stop losing business and understand what is the Fed going to do, because that's really important. Why? Who are the Fed members? Who are the voting Fed members? Which way are they leaning? And then what would a Fed rate cut mean? Because a lot of people are really stupid and say, oh, Fed cut rates, mortgage rates went up. They don't understand that the market moves ahead of that. Mortgage rates move down ahead of the Fed rate cut, and then it's dependent on market moves. What government releases are going to affect interest rates, jobs report, employment reports, inflation reports. What does it mean? What type of reports are there? What is the forecast? What are we looking for? If you start having conversations like that with your customer, everything changes. A customer is going to talk to a typical LO, and they're going to say, okay, so look, am I making the right decision here? It's like I'm a little worried. I'm hearing about all this stuff. Is the market going to really crash? Is that affordability? Which way are rates going? Oh, well, and LO responds, "Well, market seems pretty good right now, and as far as the rates go, and goodness, if I knew the answer to that, I'd have a pina colada on the beach." You just blew a golden opportunity, because now they call someone else, hopefully you, that's really educated. And what you would say is, what a great question, Mr. and Mrs. Klein. Like anything else, real estate value is going to be determined on supply and demand. And right now, when you look at what is happening in the real estate market, household formations, which is the demand side, they were averaging in the US about 1.8 million households a year that were new. That was your demand. Now, builders were putting up about 1.6, 1.7. So that's why inventory was kind of tight. The thing that's interesting is just in the past year, those household demands, the household formations, that dropped to like 1.1, 1.2 million. And it's not as if there's a fundamental change. You see, people still want to get married, have kids, they want a backyard, they want a garage, they want to work from home office, they want a location, whatever it is, people still want that. However, what we're noticing is that people are postponing these. We've seen over the past 8 years or so, the home ownership for first-time home buyers rate has gone from an average age of 32 to 34 to 38, and now kind of knocking on the door of 40. So we're seeing a postponement there. It's not a major change. Eventually, A, that catches up, and B, it needs a catalyst to increase demand. Demand will be increased if rates come down. That's why we watch rates. Now, meanwhile, on the supply side, you've got builders who were putting up 1.6, 1.7 million homes, but now that they see the demand is cooled, they have really slowed down production to meet the demand closer to 1.1, 1.2 million units. So I want you to think about this. Think about the opportunity, Mr. and Mrs. Client. If interest rates come down, it increases demand. It's got to be sustained for a few months. It can't just drop for a week and then rates go back up. If interest rates come down and stay down at a reasonable level for a period of a couple of months, demand increases, but now supply is reduced. Can builders blink an eye and increase supply? No. So you have higher demand than supply, which means prices will rise. The time to do it is in advance. Now, on the interest rate side, are interest rates going to come down? Well, look, we know that the Fed is obsessed with inflation, but inflation's overstated, primarily tariffs, and primarily because a lot of the things that they look at are lagging. We know that a big portion of it is called shelter, like rents, but those have been coming down. It just takes time to see it. So we know that's going to come down. That'll help rates. That'll help the Fed cut. And the job market has got a lot of potential weaknesses. The Fed's going to be cutting quite a bit in 2026. That will help us. And now when we see other things that are going on in the marketplace, the Fed just in December is going to begin buying because they ended their runoff. That'll help us. And now Scott Bessent's got this deal where he's trying to put together that will help banks. It's called the bank deregulation deal, buy treasuries. That will help interest rates come down. So we've got a lot of things working there. If we get rates back down around 6 or under 6, and I think we can get there, boy, oh boy, you'll see a lot of demand. So if you ask me when the right time to buy would be, I would tell you right now is a pretty golden opportunity, especially if it's slower in between the holidays.
Right.
By the way, that was about 3 or 4 minutes.
Yeah.
But would you agree that if I said that to a customer, my chances of getting that loan are a lot better than the pina colada boy who's like, oh, if I do with it.
Yeah, I'm ready to buy a house right now, Barry. Yeah. Right. Yeah. It's a lot. And I think it's how like anything we do in life, it's the effort you put into that opportunity, right?
No, it's a 3 or 4 minute script. It's not a 3-hour dissertation.
Exactly.
It's 3 or 4 minutes. Can you get enough expertise to give a 3-minute summary?
Mm-hmm.
I know you can. It's just a matter of, do you want to? And that's the question, is how much do you want to level up? Do you want to be like everybody else, or do you want to stand out?
Yeah.
Do you want to be able to have those conversations? Who do you want to be as an originator? Do you want to be, okay, I'll just shop you for rate, or you're a nice guy, or you're going to promise me a fast turnaround, but everybody else is expect? Or do you want to be the person who is different than everybody else, different than AI, because you could point these things out that AI can't and show you the opportunity to create wealth, because that's what you are. You're their person that helps them create wealth.
That's right, Barry. I wrote down a couple of things here for us to chat about later on, but like that's right. It's changing that mindset, Barry. Like so often people say the pina colada line. Oh, I don't know, and guess what? I'm hanging up that phone and talking to someone else. You said something, Barry, that kind of it's caught my eye over the last couple of years, especially the last 2 years. I have a daughter that's going to college, she's a freshman in college, okay? And I was recently in a meeting and somebody asked me, hey, Del, how do you make new brokers and loan officers? How do you make them, right? And not just retail versus wholesale. I'm not talking about that. I'm talking about the generation of younger people getting into our industry. You said the average age of people buying a home is getting a little bit longer, right? 34, 35. So
first-time home buyers, yes.
First time home.
Knocking on 40.
Yeah, correct. So Barry, like, what are some things that people in general can do to give back to the youth? I know that what are your thoughts on that? Do we offer mentorships? You talk to so many people, very successful people. I fell into this industry like many people fall into it, right? Like my uncle, whatever, right? What do you think about that?
So most of us do. So I just want to understand your question. But first, first on the understanding and educational standpoint, I mean, if you go to 100 presentations, everybody's talking about marketing, which is really critical, but that's all top of the funnel.
Yeah.
What I'm trying to explain to you is the one distinction is that what we do, I think, better than anybody else, is we help you ring the cash register. We help you close it. Okay. So everybody else will say, okay, here's a gazillion leads. Great.
Mm-hmm.
We help you close it, because if you speak the way I explained to you how to speak, that's what closes it. Now, I think your question is that we are seeing in our industry, not as many new people get into it. Am I right? Is that what you're saying?
Right. I mean, yes, that's exactly right. And I would like to see more youth, like maybe coming out of college saying, hey, I want to become a mortgage broker or a mortgage professional. I know that there's programs out there to help them. At Kind, we're looking at some to offer internships, et cetera. But how do we, and I have to think about my daughter in her class. I was with like 10 of them or 2 weekends ago, and all of them had different industries. And I'm like, man, you would be really good in the mortgage industry.
Yeah. So here's the thing. We all know this. The barrier to entry, of course, is it takes time to start building a book of business, and do you have the funds in order to bridge that gap? So that's not easy, because you're not going to make it based on the hourly rate that you might get paid in the interim. Okay, so you're not going to start making real money for a while, and you never get guaranteed that. You got to be pretty darn good at what you do in order to make money. So I think that the time of entry is really important, and I really believe that the question that you ask is a really smart one here, Del, because we're about to enter that time. Here's the deal. If interest rates, and I think we get there, hit around 6%, there's 5 million refinances that are available. So, it's a lot harder to get purchase business as a new person, because that realtor's less inclined to give it to a new relationship if that person's new. Maybe they might try you as a new relationship if you're experienced and you can prove that you've done great work and this and that. But a brand new newbie that you got to walk through and teach, that really doesn't have a good handle on all the guidelines and things like that, that makes it harder for a real estate agent to give perhaps that one transaction they're closing this month, this quarter, this year to a new person. Okay, they don't want that. And there's other relationships that they might have. So I think that is a harder bridge to cross. Not impossible, of course, you get there, but I think the easier one is on refinances. And refinances where you can show a tangible benefit right away and make sense. I think now is the time to get into the business, get trained up, and then you could start making money pretty quickly if you attack the refinance arena, because let's face it, you had a huge amount of transactions that have been done right around 6.875 to 7.25%. And if rates get around 6%, you now have people, as a matter of fact, ICE, the company ICE, they did the data, and they said at 6%, 6.8%, you would have approximately 5 million refi eligible with this criteria. Save 0.75% in rate, have at least a 720 FICO score that they would have, and at least an 80 LTV. So meeting those three tests, you still have 5 million people. So that's a lot of volume that you could pick up. That's important whether you're experienced or whether you're new. And the other thing that's important about that, Del, is as you kind of enter into this opportunity phase, the time to be marketing to that is right now. And the other thing that nobody talks about is that you not only could save people money on the interest rate, but in the last 3 years, you've seen appreciation in most parts of the country. So therefore, anybody with an LTV that is above 80, so you think about somebody who's at a 90 LTV, well, in the last 3 years, you picked up 3% in amortization alone. So you don't have to do anything for that. And in 3 years, oftentimes you will find in most parts of the country, you've gained more than 7% in appreciation. So therefore, you will get to an 80 LTV, save money on the rate, save money on the MI, and it's a slam dunk. But nobody looks at the removal of MI as a way to do it. We do that in MBS Highway because we give you the values, and it's such a great tool. We have a strike rate tool that shows you the difference in rate, plus combine it with the MI, who you should be contacting. We just send you an email every day on that. But the other thing too, Del, is that even if you don't remove MI, if you start off at a 95 and you got to an 85, that's a big MI savings too. So these are ways that you can really help people, even at a 95 and certainly at a 90, not only make money by reducing and creating wealth again for them by reducing their interest rate, but removing MI. And then, you take the next step and you could show them what they can do with that. By the way, so much cash that people have in their homes. What are they doing with it? Sitting in their homes, or are they doing something that they can create additional wealth for themselves? These are the things that you need to be that are different than AI, different than your competition, and ways that you can help your customer create wealth.
Yeah, no, I agree 1,000%. A lot of information for everybody. And I hope everybody is really taking as much notes as they can with this, because this is leveling up going into next year. All this is data. In the world we live in now, it's all data. So these are great numbers. And Barry, you guys offer a great service. What you called it, rate strike? Is that what you called it?
It's a strike rate. It's a strike. It's within MBS Highway. And if you have our home report, which is fantastic, it's something every month. It engages, it gives you leads, it just keeps in touch with all your past clients, protects them from going elsewhere, and it's got an 82% open rate, which is insane. So it's very valuable to them. But we have to pull the values for that anyway. So in the strike rate tool, we'll monitor the rate difference between, because we have all the data. We know every loan you've closed. So we already have that in there. You don't got to do anything, okay? And then we'll take the current market rate versus that, show you the monthly savings. But then if you have home report, we'll also show you if they have MI, the additional MI savings. And then if something triggers to a level that's a strike rate trigger, you go ahead and we send you an email and here's who you should call today.
Awesome. We have a couple more minutes left. I just got like two real quick questions for you. I mean, obviously the non-QM space, right? Like there's so much. We obviously offer a wide breadth of non-QM products here at Kind. I look at data. People are saying going into 2026, I don't think as many people should have. Loan officers and brokers could have done a better job of educating their partners with this, right? So we're doing a whole education campaign into 2026. Where do you see the market in the non-QM space, specifically DSCR, in 2026? What do you project market? How big is it? I hear numbers all over the place. What do you see?
I mean, I think it's going to continue to play a very, very important role, especially as interest rates improved and you're going to have more activity. It's going to play another role. Another thing that's going to play an important role are adjustable rate mortgages, 5 and 7 year especially. I think the 7 year is one of the most attractive products out there. Now, I know many people say, oh, I've got a great 7 year ARM. And then some people say, well, my 7 year ARM's not that great. I understand wide disparities there. But 7 year ARMs will become more attractive as the Fed cuts rates, because as the Fed cuts rates, longer term rates do come down, but shorter term rates come down more rapidly. So you begin to have more space between them, and you could fit adjustable loans like 7 year loans, 7 year adjustables or fixed rates, whatever you want to call them. I like to call them 7 year fixed. They become more attractive and you could save more money. But even if you save like 0.5% or 0.6%, it's quite on a $500,000 loan, it's over $200 a month. And what people don't understand, this is what I mean, education. Somebody will say, okay, well, guaranteed for 84 months, I save $200 a month. So I'm going to wind up saving a little over $17,000 or right around $17,000 in the first 7 years. Wrong. It's $22,000. Barry, what kind of calculator do you have? Is it $22,000? Because what nobody thinks of, and what your competition fails to look at in the vast majority of cases, and I bet you if you're listening, you probably are not aware of this, is that a lower interest rate loan amortizes more rapidly in the first few years. So you pick up another $5,000. So you're guaranteed to save $22,000 in the first 7 years. And then wait a minute, that $200 a month, you're ready to spend it anyway. It has value. How do you quantify what the value would be? Show them if you took that $200 a month, you could actually spend it. You could put it in an account. You could invest it. But if you just guaranteed got the return by putting it back into the loan, well, then you pick up another $4,000. So now you got $26,000 that you are guaranteed to be ahead of the game after 7 years. What happens after that? Everybody foolishly says, well, what if it goes to the max cap? What if it goes? Well, if I took all of my invested dollars and said, hey, I'm going to buy a lottery ticket with it, would you think that that's a wise investment? Clearly not, because your odds of hitting that are extraordinarily weak. It's not going to happen. That would be making the same business decision on the basis that you think it's going to go to the maximum cap. You can look at a 40-year history based upon SOFR plus 2.75. Do you know what it is? If you don't, this is what I'm talking about. Education. Who do you want to be as a loan officer? Do you want to be the pina colada guy, or do you want to be the one that really understands the market that your client trusts? Do you want to lose that deal to AI and be on price basis, or do you want to create wealth for your customers? Here's the answer. The last 40 years, if you took SOFR plus 2.75, the interest rate is 6.96%. So let's say that's 7.1 ARM or 7.6 or whatever you got. After the 7 years, it goes to the average rate that you've had. Do you know that you never break even? Because that $26,000 that you've saved never gets paid back. You always come out ahead. So this is a great tool that people should look at. And I understand that right now people might not have the rate differential to make it as sexy, but you should and will see improvement as the Fed cuts rates.
Yeah, I love it. Thank you, Barry. I really hope as part of leveling up, people take the education part serious, right? If you're a broker, loan officer, processor, whatever it is, I have seen that there's a big need for it, but there's not the follow-up. There's not the follow-up.
No, and this is why, look, you know me, I'm all about love, right? And this is a form of love. So if you hear me kind of trying to give you a little bit of cold water on the face here, it's because it's with love. It's what I'm trying to help you and protect you and say to you, hey, wake up, level yourself up, get yourself to a point where you are literally the expert, not on how to put a loan together, because this is a better expert than you.
Yeah.
You got to do what it can't do. You have to look at the future. You have to understand these things and be super sharp, razor sharp. Don't be overwhelmed by it, because it's just a matter of making the dedication to the time. We make it really easy within the MBS Highway. You get all this education, you get all this knowledge, you get all this data right away. But if you use it, if you don't, in either case, get yourself to a higher level of knowledge and education and be a better resource. Don't you owe it to yourself? And don't you owe it to your customer too?
Yeah, we do. We do. We owe it to ourselves, our customers, and everybody we partner with every single day. Barry, listen.
One other thing.
Yeah.
You start speaking like this and showing the opportunity. You know what happens?
What's that?
Your referral source says, holy shit.
Yeah.
I need you to come with me to talk to that customer, because I can't explain that. You explain that to them. Okay. I need you to show them the opportunity, so they'll go ahead and put the contract in.
Yeah.
That's who you want to be.
That's right. That's right. And Barry, listen, the theme of this year going into 26, is leveling up. And boy, did you help us level up today. My friend, thank you so much. A lot of nuggets in this, a lot of great pieces here, but the number one piece I think here is the word accountability. Barry comes to mind, right? How do we become better going into next year and leveling up? So Barry, thank you, my friend. If we need to get a hold of you, how do people get a hold of you, Barry? Obviously,
on Instagram, I am Barry Habib. You can take the stuff I've got on there and you could go ahead and use it, or at MBS Highway. Absolutely.
Awesome. All right, my friend. It was so great to see you. Thank you for your time. Thank you for watching our newest edition of Del Talk, and we're going to keep on leveling up going into 2026. Thanks, everyone. Thanks, Barry.